What are the overall observations that we are seeing in November 2023? Where are the areas of opportunity? I'm going to give you a lot of information here that's very valuable about different locations across the country. So I probably wanted to start off today by just giving a high-level overview of the opportunities that we are seeing in the market. This is obviously the end of October data dump heading into November. So even though we did release our more recent data set a week or so ago, we will have another data dump, a whole nother algo revision in the next couple of weeks. So this is live as of today. I just wanted to probably reconfirm the effectiveness of these recommendations and algorithms, and I guess looking at a snapshot of our track record. So I will draw your attention here to this slide. We take our results and auditing of these results extremely seriously. This algorithm is the most performant in the country. It has been responsible for $1.3 billion and counting in residential acquisitions, and we are very proud of the fact that routinely it gets us into markets first. We might be a week, a month, or even a few months into a market before other algorithms that you're probably familiar with out there in the industry, and we've taken a pride. It's been developed to allow us to do that. It allows us to front run these markets, to position ourselves and our clients for success, to acquire all the best acquisitions, and then bring those other algos, those other larger buying groups, etc., along for the ride. We are updating this using sophisticated AI technology very regularly. It is current as of late 2023 using best practice, best technology. It's not a dated algorithm, and we take this very seriously. The results, therefore, are consistent with that approach, and the results definitely do speak for itself. Over the last 5 years, so this is a very large sample, as mentioned, many hundreds of millions of dollars worth of assets allocated, purchase and capital allocated, 17.7% compounding capital growth. So that's not over the 5 years, that's each and every year. 17.7% compounding capital growth over a full 5-year moving window. This algorithm's been going back to 2015, but we've chosen the last 5 years as a moving window for us to assess this. And this is audited very seriously. When you compare that to the national average of 3.4% capital growth over the same period, we have an investment alpha, the difference between normal and us, of 14.3%. So that's, giving you a high-level overview of the performance of the algorithm. And you can also see as well, I'll remove this, each individual purchase. So once again, we take the auditing of these results very seriously, and this is plotting the actual individual purchases over that time. So going in, what are the overall observations that we are seeing in November 2023? Where are the areas of opportunity? I'm going to give you a lot of information here that's very valuable about different locations across the country. I'm not going to go right down to the suburb level in all cases. I think there is a lot of value to our clients behind the curtain for that information, and obviously for our mastermind, those of you on the line, etc., for this information, but I am comfortable to talk about it at a larger regional level and then dive down individually, which is how we generally operate. So look, really high level, the top emergent LGAs. Okay, so I've gone through this process with each of these. We had 600 plus suburbs, new suburbs with a Ripe House R score in the top 10 percentile. So a lot of new areas for me to personally assess. I only approved just under 1 in 5 of them. So just over 100 new locations that we added. Many of them were rejected due to supply, due to local constraints around density, around different types of dwellings, about localized factors, overlays, etc. So we're very fussy with those, the algos and the data, and then also myself going in and approving locations based on what I've seen work in the past. Definitely have to be very fussy with that. One thing at a high level that I did observe, very few locations added in the WA Perth market. Okay, WA overall, but Perth specifically. And the only suburbs that were added were at a different price point than we have actually previously been acquiring properties at. Really interestingly. That's not to say that there aren't still locations that are approved. I'm talking about new locations that were added. Okay, but really interesting. I will focus on WA first. Of those I mentioned, of those new locations, those new suburbs that were added, they were all in the one cluster, in that northern Perth pocket, out to the coast, from the northern Perth CBD up to the coast, etc. And they were at a different price point. So what do I mean by that? Typically in 2021, 2022, 2023, we've been acquiring at a $500,000 or under price point. Great yields in the southern Perth region predominantly, but inland as well in some pockets. What we are seeing though is a very strong trend towards that $600,000, $650,000, $700,000, $750,000 price point in the Perth market. Why do we care? What does that matter? Well, really interestingly, when we first started looking at Perth 3 to 4 years ago, that was the same price point and the same pocket that moved first. So potentially we are seeing the full cycle beginning again. Can you imagine? All of the growth we've had in Perth, etc. We still have extremely low vacancy rates, record low vacancy rates. Things have got a lot worse than they were in many cases from a few years ago. We've had tremendous price growth through the mid to lower socio price points throughout the Perth market across the board, but rents have been keeping pace with all of this price growth. So yields are holding up. We've had amazing macro and government and industry level investment into the Perth market, and we're very bullish on Perth longer term. It is truly becoming a global city, and it's really set up itself well for the long term in terms of capital growth. So is this the cycle repeating itself? Because the market conditions in these locations at this price point are very similar to where they were 4 years ago, 3 to 4 years ago. And these were the markets that we saw first, leading the charge for Perth at that time, and then the mid to low socio, the price points under this caught up, and they caught up. The other phenomenon that we are seeing is we've seen, places like Rockingham, Armidale, probably the two of the largest LGAs where this phenomenon has occurred, where clients and ourselves and investors were buying, for $300,000 or $400,000 and have had tremendous growth over the last 1 or 2 years. I'm talking 20, 30, 40% capital growth. So you've got a property that was purchased for $400,000 now worth $500,000 plus. Well, these areas are lower socio. They are materially further away from the Perth CBD. And so when you are buying now in these areas like Armidale and Rockingham, which we still are acquiring properties in, when it has to be the right deal, has to be a good deal, when you are now acquiring properties there for $500,000, $550,000, suddenly they have caught up very quickly to the $650,000 price point in the northern Perth market. Okay, they have had their growth a couple of years ago and now stabilised, and now the lower to mid socios has pushed up from the bottom. Suddenly that jump has shortened. And people might be asking themselves, why don't we go back into the city of Stirling? Why don't we go back into these northern, really close to the Perth CBD markets? It's $650. Why will we pay $550 to live down here or to invest down here when we can buy up here for $650? Much nicer lifestyle, a lot shorter commute, etc. So that's the phenomenon we are seeing. We are seeing a renewed push towards that mid to upper socio price point in the Perth market. Really quickly to summarise once again, it was the price point we see leading the cycle, the growth cycle in Perth 3 to 4 years ago. Does this mean it's a whole nother 3 to 4 year growth cycle in Perth starting once again? It could be. There's lots of signs that indicate it could be as well. And it also matches the whole dialogue of the lower to mid socio market pushing upwards and squeezing the difference between these markets. And now suddenly this mid to upper socio seems cheap once again. Really interesting stuff, guys. So going across now to the markets that we are seeing the most potential, the strongest emphasis towards. So still a lot of opportunity in WA, don't get me wrong. We're very, very comfortable with that market longer term. Lower to mid socio, not many opportunities to buy well at the moment. We are still doing the odd deal, but we are seeing that mid to upper socio pocket in Perth with the most potential. But if you are looking across the board at all price points, we are seeing Brisbane leading the charge forward. Okay, as a capital city, once again, we've seen markets in Brisbane really coming alive in the last couple of months. And you can see this here. It is the top emergent local government area in the country. And we are seeing this across many price points. Inner city unit markets, which we wouldn't touch, but they're still looking really good. We are seeing the investment grade stuff on the northern Brisbane CBD quadrant really starting to fire, even up in towards the airport and up towards the lower southern Moreton Bay area. We are seeing the western suburbs over the Manlys of the world doing really well, which we've had a lot of success in over the years, and that's now filtering down into the Gold Coast, Logans, parts of Moreton Bay as well, and Ipswich. It's the whole region on a national level firing on all cylinders. So heading into 2024, we are very comfortable with many markets in the Brisbane area, probably starting with a 5, heading all the way up to $1 million. We're seeing a lot of value and a lot of great growth fundamentals there at that price point. Interestingly enough, the Newcastle, Lake Macquarie region, starting to really come alive as well. A lot of these markets are not necessarily investment grade. You have very low yields, you have waterfront properties, very individual or unique bespoke type of properties. But there are some really key investment grade markets in the Newcastle area which we are liking very strongly. Interestingly enough, it's not pushing into the Hunter. It's not coming into the Maitlands of the world. It's not going up further north. It is really focused around the Lake Macquarie and Newcastle area. Sunshine Coast, once again, some of the markets that we've made, now $500,000 per property on with clients over the last few years, buying with for a 4 and now worth $800,000 or $900,000. That these same markets are now firing up once again, which is a really great sign to see. And then overall, we are seeing the investment heart of Sydney really starting to align and fire up. Sutherland Shire, I'll start with that, has been, potentially the first market in Sydney to really open up at a national level and show very strong growth fundamentals. But it's a high socio market. It's a $2 million plus entry point. We had to be a little bit patient to see Blacktown and Liverpool's of the world starting to fire up and en masse. I don't want to just see 1 or 2 suburbs. I want to see half a dozen to 10 suburbs in these markets approved. The data's looking great for 28. We've now got 28 markets in the Blacktown area operating at a national level. But when I dive in there and manually approve them, I want to see a few, and we're definitely seeing that now. And we also have the Liverpool market. Very, very comfortable with the investment thesis for these 2 markets, and I'm expecting these areas in Sydney to fire on a national, with capital growth at a national level for 2024. We've seen Adelaide re-emerge. We acquired many properties in Adelaide, 2018, 19, 20. Going into COVID, it was over 100 properties, quite a few, over 100 properties actually. And very similar markets are now once again re-emerging in Adelaide. So going into 2024, we still have some great opportunity in WA, but it really is Brisbane, Sydney and Adelaide starting to really fire from our algorithm and I guess areas of opportunity. There are other regional centres. The heat's starting to come out. We've acquired a lot of property in the markets like Rockhampton over the last 12, 18 months. There's a lot of attention on those markets now. So we have rebiased our core focus as a business into other markets close by. But there are some of our old favourites at regionals, so there is a lot of opportunity still at a sub $400,000 price point across the country. You're just not going into the capitals to find it as much. You are going into the regionals to generate that opportunity. So look, high level summaries. So what are those? I've sort of talked through it at a more micro level, but at a state by state level, we have 8% of all suburbs in New South Wales now becoming qualified from our growth algorithm. Right, so at any one time, we only have 1,500 suburbs in the country that are in the top 10 percentile of our growth algorithm, and New South Wales has come on very strongly. Okay, it's a number one state in terms of the new emergent locations, followed by Queensland, followed by Victoria, which was distributed quite evenly across the state, then South Australia, then WA. Okay, really interestingly enough, Victoria, there are some great markets, some parts of Melbourne that are firing up. We have a broad watch and wait recommendation now going into December for Victoria. We're just not comfortable with the government, the legislation, and I guess the momentum or the indications that they are giving in terms of how they are treating property investors. So for us, we've just put a pause broadly across Victoria. There are some decent and some very good deals to be had, so we are considering the odd property in Victoria. But broadly, we don't want to be forcing, fighting against the grain there. So hopefully that really gives you a great snapshot of what's going on across the country. Definitely a repositioning of WA and the potential for a full growth cycle beginning again. So that's a very, interesting theme going into 2024. Brisbane on all cylinders. Two very strong investment pockets at an $800 to a $1.2 million price point in the Sydney market, and we also have Adelaide re-emerging once again, somewhere where we've had a lot of success in the past. Obviously, I'm not going to talk about the individual regionals as well. I don't want to give the game away there, but still we have a number of emergent regionals which we are focusing on. So hopefully that's useful for you all. Hopefully you can take some of this information and apply it to your individual searches, your individual purchases. I have sort of got on a little bit of a rant to begin with, but I did think it was worth going into that level of detail.